Capital One crumbling? Credit card chaos or calculated growth? Hey everyone, and welcome back to the channel. Today, we're diving into the world of finance, specifically the recent buzz surrounding Capital One. You might have seen headlines or heard whispers about the credit card giant facing financial trouble. But is there any truth to these rumors? Let's face it, financial institutions can be complex beasts. Numbers fly, reports get dense, and the average person can easily get lost in the jargon. But worry not, because that's where we come in. We're here to unpack the situation with Capital One, separating fact from fiction and giving you a clear picture of what's going on. Now, Capital One isn't exactly a stranger to the spotlight. They're a major player in the credit card industry, boasting millions of customers across the globe. But like any large company, they're not immune to challenges. So, where did these whispers of financial woes begin? There are a couple of things to consider. First, there's the recent end of their co-branded credit card program with Walmart. This high-profile partnership dissolution sparked questions and fueled speculation. Was it a strategic move or a sign of deeper financial strain? Secondly, Capital One, like many lenders, navigated the choppy waters of the post-pandemic economic climate. Consumer credit quality became a concern, with some cardholders facing difficulties. This naturally impacted Capital One's bottom line, raising eyebrows among analysts. However, to paint a complete picture, we need to look beyond these isolated events. Here's where things get interesting. Capital One recently made a bold move, a proposed merger with credit card giant Discover Financial Services. This multi-billion-dollar deal sent shockwaves through the industry. But why would they make such a move if they were financially strapped? The answer lies in strategy. Capital One sees this merger as an opportunity for significant growth. A combined entity would hold immense power in the credit card market, offering increased market share and potentially greater bargaining leverage. It's a calculated risk, a bet on the future. Now, this strategy isn't without its critics. Regulators and some lawmakers worry about the potential impact on competition and consumer choice. They fear a megabank forming, wielding too much control over the credit card market. So, what does it all mean? Capital One isn't on the brink of collapse. They're facing challenges, yes, but they're also actively taking steps to secure their future. The proposed merger signifies ambition, not desperation. However, the road ahead isn't without its hurdles. Regulatory approval and potential market shifts could throw a wrench in their plans. Here's the key takeaway: the situation with Capital One is multifaceted. It's not a clear-cut case of financial woes, but rather a story of navigating a complex economic landscape and pursuing strategic growth. Keeping a close eye on the ongoing merger saga and its potential impact on the credit card market is crucial. Will it be a win-win for Capital One and Discover, or will it raise concerns about competition and consumer protection? Only time will tell. With that said, thanks for watching, and until next time, stay informed and invest wisely.